Right. If it does become a push-to-shove moment, then what do we do? In other words, are Americans prepared for an economic war with China, if it ever came to that, and the higher prices that would come with that? Now, obviously, it does not appear to be a worry at the corner wall and Broad right now. The Dow sprints ahead, whatever frustrations it had with this idea that the Fed is pausing, but more rate hikes are coming. That was then. It's a different story now. That could change. Luke Lloyd back with us, Strategic Wealth Partners, investment strategist. David Nicholas, Wealth Management CEO. Welcome to both of you. Luke, first, your impression of this backdrop of our Secretary of State going to China, likely not getting a meeting with Xi Jinping. Prominent business leaders, though, often do. Bill Gates, just the latest one. That kind of sums up in a nutshell where China's coming from. Politically, we don't like to deal with U.S. government officials, but we love those corporate guys. What do you think?
I think things could get pretty crazy here soon over the next, year or two. In 1990, Chinese exports was like $45 billion, and the U.S. exports was like $500 billion. Now, Chinese exports are around $3.5 trillion, and U.S. is a $2.5 trillion. China had an 800 times increase in exports in 30 years. China was able to maneuver themselves into the middle of every country out there, which is a national security issue now. And at this point, if we don't decouple, it's going to be painful, right? There's no doubt about that. I'm not going to act like, I'm a national security expert or, a national relations expert. But what I am going to say is in business, when you make an action on somebody, you do try to decouple from somebody, there's going to be a reaction. So the whole concept of Taiwan comes back into the equation, right? And China could easily make a move on Taiwan if we start this progression of decoupling from them. That's going to cause sky-high reaction with inflation, which definitely is going to hurt the already hurting middle-class consumer. So are people prepared? I don't think so.
China's economy has been doing very well throughout all of this, David. I hasten to add they did cut interest rates when everyone around the world continues to tighten them. The European Central Bank today, we simply took a pause. I guess we're going to continue tightening soon. That could be a sign that China needs to goose things a little there. Maybe a recognition that things could get worse with the U.S. What do you think?
Well, from the economic front, if you look at the Chinese economy as a whole, I think the Chinese economy is struggling. This is why the Chinese government has been reaching out to business owners, to free market individuals, and trying to get feedback. From our sources, we've seen 6 meetings in the last few weeks with the Chinese Communist Party and business leaders in China. And a lot of these business leaders are pushing for more open and free market initiatives to the economy. But this is in direct conflict with President Xi's outlook for the Chinese economy. So this is a very interesting dichotomy here. But look, as Americans, I am all about free trade with other countries. But as Americans, we should be fighting for honest trade. And we don't have honest trade with China because China has stolen more intellectual property from individuals and businesses than any country combined. They've stolen military secrets, business secrets. And so we made a wager that if we opened up trade with China, that would lower tensions in the region and give us to be good partners militarily. But now relations with China are at all-time lows, in my opinion. So I don't think the situation has worked. The wager that we made as Americans, and now we're trying to figure out how this unravels or stays together going forward.
Real quickly, gentlemen, I want to get your quick take on what the markets are telling us today versus yesterday. Don't want to analyze that too much because it can change, as you remind me, Luke. But what do you think?
Yeah, so the fact of the matter is people are still spending money. When you spend money, the economy stays afloat. The fact that people are paying over $1,000 a ticket for Taylor Swift tickets near Pittsburgh, which is close to where I grew up, tells you a lot. Yeah. That's all, apparently. We need to start a Taylor Swift index or something. When things are super conflicting and complex, sometimes you need to simplify it, right? 2 simple data points that I pay close attention to. The retail sales were pretty good.
I threw up 0.3%. That was a lot stronger than people thought. Now it's down from what it was in April. I think we're up 0.4 then. But, you got to say this about the consumer. She, very resilient.
They are. 2 simple data points that I pay close attention to, though, is personal savings rates and revolving credit. And people aren't saving money. They are spending money on credit. The past decade, the average savings rate was 8% of income. Now we're right around 4% of income. That wouldn't be a huge issue if we didn't see credit card debt continue to rise, but it is. So are people really saving money? And it's as simple as this in my eyes. As long as people have jobs, they will spend money, but will it last forever? A lot of people making the average U.S. income of $6,000 a month are spending $6,000 a month, right? What if an emergency emergency expense comes up? What if inflation continues to rise and wages don't keep up? What if in October student loans start back up and you have to pay $400 a month? What if you lose your job?
Good point. David, this market has been the most trashed bull market I've seen in quite some time. So it keeps climbing this wall of worry. You have some off days here and there, but technology, you look at the S&P 500, both of those, and the Nasdaq now at year-and-a-half highs, and on we go. So the market maybe is digesting all this and saying, bye, bye, bye.
Well, just look what the market's doing today. I think what the market is doing today is calling the Fed's bluff. If you look at what yields are doing, yields fell off a cliff this morning, and you have the market rallying. I don't think that would be the case if the market really believed that we had more rate hikes coming. So I think it's telling what the bond market is doing. But again, why is this market heading higher? You still have a Federal Reserve that is somewhat accommodative, right? They stepped in and backstopped banks. If the Feds didn't do that, I think we'd be in a different world for the markets. So again, I'm bullish on the U.S. economy, but we've also got the Federal Reserve really there putting winds in our sails for this market.
Yeah, the markets often get it wrong. I mean, they were thinking that we were going to get rate cuts at the end of the year. We'll see how that pans out. That does not look likely, but we're watching it. Luke, David, thank you both very, very much.